Okay, morning traders. Hope we're well. See you on today. I think Bobby's on holiday, is he? Yeah, how you going, Drino? Right, can you hear me loud and clear? Hey, Nick, Anthony, how are you guys? Guessing I'm coming through okay. I just want to be certain. I want to stuff around with these headphones. All right, sure, I'm doing okay. Thank you. All right, so welcome. Last night, big sell-off. I was kind of expected to see coming into the market. You can see Tesla was down. I think it was down around 10% in the pre-open. Got smashed. They got Polex last night to down 20 something percent, I think, in the end. 21, just under 21. Jezza, 21, just over 21%. So they got knocked about. And you can see the NASDAQ, big spike lower prior session on Friday. It regained a lot of those losses, but it's gapped down and continued the pressure on into the close. So it did try to bounce a bit. This is the daily chart. So on the weekly, we've got some support down here, and it's probably coming in on the daily as well. Yeah, some key support around 10.4. Now, don't know if I'll get there. It's only 600 points away. That's a one or two sessions away it's going. But this is kind of the unwind that a lot of people have been watching out for. I mean, and especially when you find out that was it SoftBank or whatever they are in Japan have been loading up on calls to the hilt and dragging the Nasdaq higher because all the market makers having to hedge against those calls, and it's kind of a self-fulfilling prophecy, which we said the other day, dragging that market higher. So that spooked people saying, well, okay, we thought it was even value up here. It was all doing great. All the stories are great, and then they find out it's probably not. And there's only, like I said, a handful of stocks dragging it higher. Turn around and get squeezed out again as people profit take, and it's just triggered a bit of a wave. More because that's what a lot of people have been expecting for a while, and it's been shorted a few times and with no success. But now that trend has broken down. I was more just watching to see if that's going to be rejection, and then we suck in a few sellers and squeeze them back out to run up to the highs. But after last night, I think that there's some more pain to come. There's a lot of, not just in this rally, but a lot of fuel on the upside that's still to come out. And there's always going to be those disbelievers, the eternal bulls that won't want to book gains. So there's still more fuel in the market to bail out. Sorry, if we're further proven wrong. So there could be some carnage to come, but we'll see. But that's it's an ugly looking chart at the moment. Maybe we're going to get something like this. So it could be the fact that we're just watching out for some lower high to come into play. We might be a bit of a squeeze lower still. I mean, it could just completely capitulate from here. It's not like it's an unknown trade. Oh, we didn't expect that coming. Didn't expect to mount down in Nasdaq. If you didn't, you probably shouldn't be trading, to be honest. Um, but some heat to come out at least. Considering that it's been driving higher, constantly driving higher for a long time now, and that bubble waiting to burst. It's finally been pricked, maybe. So yeah, we'll see if that continues lower. US dollar starting to find a bit of a bid, which is just getting up through this 93.50 zone, just above there now. Now that opens up 94 and above. So with the US dollar, I'm thinking that they're stalling on well and truly stalling on stimulus, the government or Trump side, and they're not interested in giving another trillion or so dollars, which probably the market's been factoring in for a long time now, and it's just not going to happen. So if that's the case, then and we factored in over a trillion or $2 trillion package or whatever, and it's not going to happen, the market's got to readjust on the US dollar and readjust up, which is going to pressure quite a few things. Um, Funny enough, gold actually did rally last night, even though it's not looking too crash hot here. It did find a bid last night, even though the US dollar was popping higher. Okay, so it's kind of it's the safe haven bid might be back into gold, which is good for the gold bulls anyway. And you got Aussie gold. If the Aussie gold continues to get smacked, oh sorry, Aussie dollar continues to get smacked, it's going to support Aussie gold or gold in Aussie dollar terms anyway. So that should be good for our local gold miners. Now I want to go over, not spend too much time here. Actually, there's a few other things. Crude got hammered, which is not a good swing. That doesn't look very healthy at all. That sell off the last few days. I haven't looked at the daily chart for a while, but it's back down in the MAs, but it's not looking crude too crash hot. We're back down on this key support. If I can draw it out through here. So if we go down to a 4-hourly chart, it might show up a bit better. And it's broken down. So what it has done is broken down out of a few key support levels. I'm mucking around with this chart, isn't it? Trying to get that whole level. Okay. So we've taken out some inside support here, and here. Fell through that, and that was basically on the open of the European session. Just went smack straight down through there. Took out this 37 even level, and it looks like we're going to charge down and potentially put under pressure 34.60 or 34.50 thereabouts. Put that under pressure too. So there's quite a few longs that have been building up here, just been squeezed back out of the action. So that, don't forget, that's probably going to be, if we're looking at a sell-off, there's going to be some shorts loading in, you would expect, because of expectation of another move down to zero, or something like that, a big carnage into crude. That could be the case, but we'll have to just wait and see how that plays out. But it looks like there is definitely a bit of a short squeeze. Sorry, a long squeeze. Any longs have been building up for a while now. Squeeze them out. I think demand, your expectations that if we're going to a bit of a meltdown too, and I saw some news just recently, there's some COVID-19 vaccine that got put on hold because of someone being sick. So that could throw a bit of a spanner in the works with expectations we're going to come out and everything's going to be rosy again, especially when we're starting to melt down now. So expect a lot of negative news to start to flow as the news outlets just try to drum up that fear. And it's a good time to do it when the Nasdaq's melting down, which a lot of people are expecting. So if you start to drum up that fear through whatever headline they use, this thing could get out of hand on the downside. Not saying it is just yet, but there's a few signs that we've been watching that it is. It could be the start of something. So it's better to take a risk approach than anything else, an aggressive approach. Buy the dip again. You can always buy off a higher low. I mean, if you're keen, you're adamant that the market's going to go higher, wait for a higher low to play out. Wait for something to play out on the Nikkei. Don't just dive in trying to catch a falling dagger because you don't know how far it's going to fall. It's a losing proposition. So what do I know? Copper. So copper, it's not so much in the 4-hourly chart. Well, you can see it got hit last night, basically the same time as crude. Opened the European session around 4 o'clock. Bang! It did flick out a few, and it was the same with the Aussie dollar. You go and look at the Aussie dollar chart, which we might do. Flick out a few, bring in a few longs, and turn around and squeeze them straight back out, and just squeeze out a few shorts. So it's just popped up and then bang, straight down, and it's been pretty much one-way action. So that was probably expectation. If the market's going to get a bit of a sell-off, there's going to be some profits locked away. Longer term, it might be supported by a lack in supply. I think supply levels are starting to drop, or they have been dropping, and that's probably what's been buoying copper. I'll probably come to the party later with that view, but that's what could, down at these lows could bring in some support. It just depends if the fear starts grabbing, because once fear takes hold, it doesn't matter what the fundamentals are saying, okay, until that fear's driven the market where it wants to drive it. So you look at Aussie too, that little flick higher, and then bang. And the US dollar, I don't know what the US dollar was doing just then. I think it was sort of chopping around, but it was edging higher. So once it started getting a bit of a move on, and equity markets, the European equity markets actually opened up okay. FTSE was kicking higher. I think the DAX was doing okay, and then they turned around and just fell from there. Got sold heavily. So that was, what was moving around the Aussie dollar. So there could be more to come. It's down on this support now. So if we start to find a bid around here and some support, we might get a bit of back and fill, and it's probably fair enough. That move down's been quite solid. You might get a bit of buying in there, and we will be watching out for that lower high to hold, and it's got to do with the Nasdaq. What happens with the Nasdaq? Let's get on to the intraday stuff. That's the Nikkei. It's open weaker, so I didn't expect it to gap down, but yeah, it's just showing that what we're more concerned about now is the fear driving the markets, and it's going to open up volatility. It's going to open up some opportunity, but just be wary of your levels. And this is where I'm a big advocate of not buying on support. Days like today, you'll look at support, you'll put your bid in there, and it'll drive straight through and stop you straight out because it tends to go a lot further than expected. So don't wait. Don't try to guess where the level is going to be. Wait till it shows you. And then you start to get some buys, step in if you're going to buy. Just saying. But if you're going to short, wait for something, wait for some shoulder to come into the market, because even on the short side of fears driving it, it's Once it kicks off, you'll know it. I mean, if it doesn't kick off straight away, get out, because the volatility will mean it spikes quick as well. Okay, so meaning that if this breaks that level and your expectations that it's going to drive through and you sell short and it goes a few points, just be careful, because with the volatility, if volatility kicks up and fear starts driving the market, it's not going to look back. It's going to drive straight through it, and you'll know within seconds whether you're right or wrong, because it will just go bang like a stone. Well, you would expect anyway. The Dow was also open lower below that 27,480 zone. Now, there's not really any serious key bid level on the way down. There's a few inside levels, but they don't. If, like I said, if the fears drive the market, you can sort of forget about those. It's got to look for a key level, and if the market's going to sell off, it's going to sell off hard. But either way, it's gapped. That could just be a flush. We might back and fill in here and do something like this and trade back up to these highs, and see what happens in the US Open. Looking for more weakness into the Nasdaq that could be set up that way. Who knows just yet? But just there is, with the Nikkei, like I said, just gap down below that level, and it's backing up a bit now. The same with the Dow. It could be a bit of fear. It's coming into the market at the moment, with expectations of a big sell-off. It's been looking for it for a while. There've been a lot of shorts, short sellers diving in, getting squeezed out, and diving and getting squeezed out. They could be right this time. So the Hang Seng, the key one we're looking for. I'm looking for that weakness to continue. I want to see if this level can hold 24,450, and we'll see if that drive through 24,210. Now let's go across to the futures. Actually, let's just see before we get onto the Nikkei more. We'll just look at so we drove straight through that support now on the SPY. So the SPY is going to be opening. It might just be cleaning out a few longs, reset on a shoulder. We'll just see. I mean, it's going to gap down on the open around 100 points. So whether we get a bit of a bounce and then look to sell into a bounce if that fear persists, we might get around this, like I said, a bit of a flush. If it's going to be really negative, SPY, the ASX is going to open lower, and you're going to get, the rally 60-something points yesterday. Sort of, I think, for not much. I don't find anything that really should have triggered that rally, apart from people just being overly lingeringly bullish. And to find out you wake up and the Dow's down 600 points, it's going to, anyone that was buying yesterday, buying towards the highs, toward the ends of the session, is going to be a bit nervous today. And that's what could drive the market lower. They might be quick to look at it and go, oh, the Nasdaq's falling. We all know that was only a few stocks holding up potentially the whole market. I want to bail. If that gets the case, we could still drive down. We could be down 200 points today. Don't know. I just want to see what the open plays out, or how the open plays out. So the Hang Seng, we'll get over to the other charts. Just better looking at directly the futures market. I haven't drawn it up, but we've got, support where it's hovering around down here. It's just above there now. Then we've got further support potentially at a lower level. So when you've got something so close, the market can drive through there easy. And that's give or take 300 points away, which is not much if the market's going to, it's cruising for a bruising. So that's what I'll be looking at. So we've got, sorry, just looking at a message that popped up. So we've got, and then there's the inside level just holding the market down here. And then you've got another one, that minor inside level, which is the one we we're just talking about. If it can hold down under that 24,430, the market could really, not very good on the charts there. The markets will really drive lower. So you got this level here. If this starts to hold up, we might have to back and fill, squeeze out some shorts, and it might even do that on the open. Might squeeze out, flush out here, spike through, and then we'll be looking forward to see if that's going to find some offers, start to just let the market spike through that zone. 23, was it 430? So it's only 100 points away. It's not much on the Hang Seng. Spike through that level, and then find if that holds a shoulder you can sell into, because the trend is still down. The market will do that a lot. Spike, sell off, spike, sell off, spike, sell off, that sort of thing. Spike up here. Don't know if that was the open. That was 11.15, so that was the open. It sold off, and again later on spike, and then sell off again. So whether we do that or we just drive down from here, to be interesting to see. So the Hang Seng itself, the index, Yeah, that's not looking too crash hot. You'd expect that it's going to gap down on the open at 11:30, and then just see if it continues. I wouldn't mind seeing a gap down, and I want to see this gap down and start to get choppy. I want to see some sort of direction. When you can get a move that's gaps and goes. Yeah, not just a gap and back and fill back up again. But we'll have to see. All right, that's it for now. That's all I wanted to touch on. Any questions, send through an email to support@tradesetup.com.au. And remember, if you want to join in the intraday live trading room, it only goes from say 11 o'clock till about 2 thereabouts. Just the main action on the Hang Seng during the day that we play around in. We might talk about other things as well if we get bored. But yeah, that's just send us an email, support@tradesetup.com.au again, and I'll send you the link. All right, guys, enjoy your day, and I'll speak to you. Anyone that's joining in, I'll speak to you later on. Cheers, guys. Bye.